Welcome to our channel on accounting lessons with worked out problems. Brought to you by an experienced accounting professor with a CPA. We have videos on all topics of introductory financial accounting. Our focus is on step-by-step illustration of a problem, worked out on a whiteboard. Each topic also reviews concepts at the end if you need to brush up. Please do not forget to subscribe. The topic on current liabilities is illustrated in 3 separate videos, namely 1. Accounting of liabilities that are known, 2. Accounting of liabilities that are to be estimated, and 3. Accounting of payroll liabilities. Each video will also discuss the concepts after the illustration. This third video is an illustration of accounting of payroll liabilities. Take a moment to review the problem description. You will find it helpful to have a printout of the problem for reference, while the problem is being worked out on the whiteboard. Let us begin.
Now the payroll. So you know what the payroll is. The company has to pay the wages and salary to the employees, and by the federal law and the state law, the companies are expected to withhold certain income taxes and also certain other payroll tax. For example, employees are expected to pay Social Security tax and Medicare tax. So whatever the employee pays out of their salary towards the Social Security and the Medicare, the employer, the company, is also required to pay the same amount. So in addition to the taxes withheld from the employees' salaries and wages, the company also have to pay out of their pocket certain payroll taxes. So we are going to go over that step by step. So here, the example, for the month of January, the total wages and salaries of all employees amounted to $350,000. The full amount is subject to the Social Security and Medicare taxes. The company withheld 15% of the amount for the federal income tax. The net amount will be paid to the employees on the first of the following month. Now, the company also, in states where there are state income taxes, the company must also withhold the state income tax. And so is the city income tax and other local income tax. Okay, folks? So here I'm going to give you only the federal income tax because there are some states that do not impose the state income tax. So here we are going to calculate the taxes withheld and the liability amount over the withheld amount. The second one, we are going to calculate the employer's own payroll tax expense and the liability, and we are going to record them in the company's accounts. So here, first one, we have to make some calculations. So first calculation is, so for January, the salary, total salary expense equals $350,000. So here, the federal income tax withheld, it says 15%. So 15% of this $350,000. So the company is going to withhold $52,500. And then the Social Security tax. Now the totals, the employees pay 6.2% on the Social Security tax and 1.45% on the Medicare tax. So together it is called FICA tax, FICA tax. The FICA tax has 2 portions, Social Security at 6.2% and the Medicare tax at 1.45%. So here, this is the first tax withheld, and then the Social Security tax withheld, that will be 6.2% times the $350,000, that equals $21,700. Now, the Medicare tax withheld, that equals 1.45% times $350,000, that equals 50,075. So the remaining, the company is going to pay towards the employees. So first, we are going to record the salary expense and also the withheld amount. So first entry would be, this would be the entry number 1. So here, okay, debit, credit. So the first entry to record the salary expense and the related withholding amounts, first you debit salary expense $350,000. Then federal income tax withheld payable or liability, that equals 52,500. Next one, Social Security tax withheld payable, that equals credit 21,700. Medicare withheld payable, you credit 5,075. The remaining, the company is going to pay to the employees. So if the company is paying at the time they are recording this, you can credit cash credit $270,725, which is 350,000 minus all these numbers. So this is the first entry to record the salary expense and this all the taxes withheld from the employee's salary. The second entry will be to calculate the company's payroll tax expense. So here, second, the company's payroll tax expense. Remember, the company is expected to pay the same amount of the Social Security tax and the Medicare tax. So here, for the company, the payroll tax for the Social Security tax would be the same 21,700, and the Medicare tax will be 5,075, and then and then the company also have some other payroll taxes called unemployment tax. Now unemployment tax, how much is the federal and how much is the state, depends upon the agreement between the state, the specific state, and the federal government. Usually the federal unemployment tax will be 0.6%, and for the state unemployment tax will be 5.2%, okay? So here I'm going to assume, okay folks, now I'm going to assume the state unemployment tax rate equals 5.2% and the federal unemployment tax rate equals 0.6%. So again folks, depending upon the state, these rates can vary for the federal as well as for the state, okay? So here, based on this rate, I'm also going to calculate state unemployment tax, which will be 5.2%. Okay, again, the state unemployment tax is based upon $9,000 per employee. Once that is covered, no more tax. And for the federal, it is up to $7,000 per employee. So now assuming all the $350,000 come under the 9,000 and 7,000 break, okay? So let us say the SUTA tax will be 5.2% times $350,000. That equals 18,200. Now the federal unemployment tax 0.6% times $350,000. That equals 2,100. So here the total company's payroll tax expense is Social Security tax 21,700, Medicare tax 5,075, state unemployment tax 18,200, and federal unemployment tax is 2,100. So this has to be also to be recorded, and all these amounts come from the company's pocket. So here the second entry would be the payroll tax expense. So here, the total expense, if you add this plus this plus this plus this, that comes up to $47,075. So for the second one, you debit payroll tax expense 47,075, Social Security tax payable 21,700, Medicare payable 5,075, state unemployment tax payable 18,200, and federal unemployment tax payable 2,100. Okay, folks? So now, when the company is paying all those, okay, folks, this goes to the federal government, this goes to the federal government, this goes to the federal government, and this goes to the state government. So when the company is paying this payables, it's going to debit all these payables and credit the cash.
Now we will review the concepts related to accounting of payroll liabilities.
Now, what are the different types of current liabilities? First, liabilities with known amount. The second type is the liabilities to be estimated. And the third one is the payroll liability. Here, the company has a liability for the taxes withheld from the employee's earnings. The law requires that the employers should withhold employees' federal and local income taxes and other taxes from the employee's earnings. And then the company is also liable for the employment taxes the company has to pay out of its pocket. The fourth liability is contingent liability. Here, the incurrence of the liability is contingent upon a future outcome of a certain situation that is currently prevailing. Now, contingent liability will not be covered in this video because the rules are a bit complex. Now, payroll liability. First, there are two liabilities as we mentioned earlier. First, for the taxes withheld from the employee's earnings. So employees are required to withhold the federal and local income taxes, Social Security taxes, and Medicare taxes from the employee's earnings. And these taxes withheld are the company's liability towards the respective government agencies. The second payroll liability is related to the employment-related tax levied on the employer. On the employee's earnings, the employer also must pay taxes on Social Security and the Medicare taxes, federal unemployment tax, and state unemployment tax. Now, federal and state unemployment tax rates vary with the states. Now, the tax rates. First, the Social Security tax is 6% each for employer and the employee. What it means is the employee has to pay 6% of the Social Security tax on their earnings, and that will be withheld by the employer. And the employer also has to pay 6.2% Social Security tax on the employee's earning. The second rate is the Medicare tax. This is 1.45% each for the employers and the employees. So the employers pay 1.45% on the employee's earnings, and the employee also have to pay 1.45% on their earnings. The Social Security and the Medicare taxes are collectively called FICA tax.
Thank you for watching. We hope we were able to help you with an understanding of accounting the payroll liabilities. We have video lessons with worked out problems on all topics of financial accounting. Please do not forget to subscribe.